Alibaba is a very interesting company. Let's take a quick look into Alibaba to see if this is a good company to invest in. If you were to look into Alibaba, there's many different business segments, but let's just focus on two major parts. One is their e-commerce business, which comprises of their China business, which is their Taobao and Tmall business, and their international business, which is their Alibaba International Commerce, followed by their cloud intelligence. This is their cloud services business. So if you can see from here, you realize that most of the profits comes from the Taobao and Tmall business, which is the China business. If you were to look into their EBITDA margins, Taobao actually has around 41% margin. Their international business is currently non-profitable at 10% negative margins, and their cloud intelligence business segment is only at 8% margin. We can actually conclude that in the short run, the Taobao and Tmall business is the most important business. If you look into their latest earnings ending March 31st, 2025, you realize that their revenue actually grew by 9%. This is not due to any of their GMV, which is their transaction volume increasing, but rather due to their take rate, which means that they earn more per dollar of transaction volume. This came from the software service fees and also their advertising business. So I think from here we can have a glimpse of the China market whereby you can see that demand is still soft. So how they actually gain more revenue is by squeezing more money from each sales. And if you didn't realize, this is their earnings ending March 31st. So this is even before Liberation Day, and the GMV growth has already stagnant. I think there's a high possibility that for the next quarter, their volume might be impacted, and the increase in the take rate will be offset by the decrease in their transaction volume, and this will definitely have an impact on their next quarter's earnings for their China business. For their international business, the revenue growth doesn't matter because this is a non-profitable business segment. From a EBITDA perspective, they did manage to increase it by 13%, so they are actually losing less money. But this is mainly due to the layoffs, which is the easy way out in 2024. So going forward, getting the profit margin to be positive wouldn't be an easy task. They most likely will need to upsell more expensive software to increase its profit margins or do more layoffs. But I think that is highly unlikely because if they were to continue to do the major layoffs in 2025, this will definitely impact the morale of the company. I think that the EBITDA will slightly improve in a minor way for 2025. This segment is definitely not going to impact the net profit for Alibaba as a whole in general. So let's just skip to the next interesting segment, which is the cloud intelligence segment. This is the main reason a lot of investors are actually investing in Alibaba, expecting high growth in their cloud intelligence group business. For the cloud business, you can see that the revenue for Q1 of 2025 increased by 18% and their profit margin increased by 69%. 69% is nothing amazing because it actually came off a very low base, which is around 5%, and now it have increased to around 8% to 9%. So it is still a very low margin business. Most of the revenue for this quarter is actually coming from their public cloud services. Even though their public cloud services is picking up, we can actually tell that their private cloud business, which has clients from the government and private enterprise, is not doing so well because they need to decrease their prices and their profit margin to 5% to actually maintain their market share. This shows that this market is competitive, and that is why most of their growth is coming from the public cloud. If you were to look at Alibaba cloud business, their global business is definitely going to take a big hit because Alibaba doesn't have the best AI model, the best software stack, nor do they have access currently to the best GPU anymore. So basically, they are just maybe a secondary generative AI solution on a global stage. They most likely wouldn't do well at all. You can see from their cloud businesses globally, they are actually losing market share in the global market. Where is the future revenue going to come from? It's not going to come from overseas, it's going to come from China. And it is not going to come from the private cloud is going to come from the public cloud, which means it all boils down to if you believe that China enterprises or enterprises in China is going to adopt China AI in a big way going forward. Personally, I think this is the next best alternative to US AI. Most likely, they will need to adopt it over time. If not, they will be in a big disadvantage compared to the other countries that adopts AI outside of China. So in conclusion, I think for their business segment, there's some headwinds for their China business. International business will slightly improve, but definitely not going to make a major impact. In terms of their cloud businesses, there will not be any major profits in the short run because it is so low margin and they are still trying to gain broader adoption. So unless you do believe that there are enterprises in China is going to adopt AI, that should be your main reason in investing in Alibaba.